right. Well, good afternoon, everyone. Thank you all for attending today. I'm really, really excited about this webinar because this is one of our showstoppers for our greatest mortgage show on earth coming up here on July 31st to August 3rd at the Hilton Bonnet Creek in Orlando. And so, first time sponsor for us, and we are just absolutely thrilled to have Quontic Wholesale with us and James Hooper as well. There's a lot of great information that he's going to provide us on some great products. And in today's market, we all know how much we need information today and how much the different products that we need to look at and be involved in. And it's sponsors like this and companies like this and people like this that bring this to FAMP. So we really do appreciate, James, you being here. So I'm just going to kind of give you a quick introduction, if you don't mind. James Hooper is an experienced senior financial executive who excels in business development and building effective sales team in the community banks, credit unions, and mortgage bankers industry. He has a proven track record in starting up mortgage companies and rebuilding them. With a background in overseeing sales and managing operations, he has a solid group of quality assurance, product portfolio, and human capital requirements. James started as a retail loan officer and quickly learned all the aspects of the operations place to support a sales division. He then joined one of the top 5 banks in the United States and expanded the banking brand into Arizona, California, and Texas markets. He also has experience as executive in mortgage banking companies. James is actively involved in his community and participates in various charity organizations, coaches, and mentors in the Boys and Girls Club, and serves on the Foster Care Review Board in the state of Arizona. And now, obviously, with Quontic Bank and Quontic Wholesale, you're here in Florida. So, James, I am, again, thrilled to have you. We are thrilled to have you. And just take it away.
Well, Linda and Courtney and fam, thanks for that warm introduction. I may have you call my wife after this call
Okay.
and just
I will
remind
do
her
that.
how great I am. I'm I'm just kidding. But again, we're very proud to be a sponsor of FAMP, and obviously we are excited about seeing you guys in a couple weeks. Hopefully, you folks that are on the webinar, you guys will have an opportunity to make it as well. Stop by, see us at the booth, right? We're excited to be there. But for the topic of this webinar, one of the things, and I do have a PowerPoint presentation, and I'm going to introduce you loan officers and probably some processors to a very, very unique product, right? We're Quontic Wholesale, but we are Quontic Bank, right? So we are a bank in the wholesale space, specifically in the non-QM space. So a lot of things that we're going to talk about. We're going to talk about the second mortgage product. We hold this product on our balance sheet, right? So we're very unique in the sense of that, right? Most people who are offering non-QM second mortgages in today's market, they're selling that off into the secondary market. They're doing some stuff, and you'll see a lot of uniqueness of lenders there of what they do. But what you'll find after this presentation is hopefully my thing is you take away some, like, all right, this is unique and this is different in the marketplace, because I'm sure you guys said on presentations and they all seem kind of the same, but my hope is that you take away some of these nuggets that I'm going to give you, and like that's a great product. That's some stuff that we can use. So one of the things we've done over the last probably 4 months is launched a Quontic second mortgage P&L and VOE loan. If you're familiar with us here at Quontic, if you've done business with us on the first mortgage side, it is called our Light Doc product, right? So we took that product and we rolled out a second mortgage product, and we did some unique things with the second mortgage product, in addition to our full doc product as well. So I'm going to talk a little bit about that. And Linda, and I think maybe I mentioned this, there's a chat box, right? So if you have any questions, or any scenarios or anything within that, feel free to chime up and I can kind of answer those scenarios for you. So I'm going to go ahead and kick this off. I don't need to introduce myself. Linda already did a phenomenal job of that, but I am the SVP of production manager here at Quontic Wholesale. I also oversee our operations and our underwriting department as well. So a lot of stuff kind of rolls up underneath my wheelhouse here. So we'll talk quick about the agenda. We're going to talk about the HELOAN, right? Obviously, the key word out in the marketplace is HELOC, right? I don't want to educate everyone on what a HELOC versus a HELOAN is, but it's a closed-end second, right? It's a fixed-rate second mortgage. That is the difference between the HELOC, the line of credit, and the loan. We do not offer line of credits here at the bank, right? In the wholesale side, everything is a closed-end second mortgage. We'll talk about highlights and topics, the market, what is our light doc, and then the Q&A just real quick. So, obviously with a home equity, you're going to be able to qualify, we've got a full doc and that light doc solution, and we're going to talk about some of the differences between the two. But these are for your non-QM borrowers. Your agency borrowers, look, you can go get a line of credit, HELOC with UWM. You can get it with your local bank. Your borrowers can go to a local bank. Although I just heard that Chase does not offer their customers or their banking customers home equity line of credits, which I found pretty interesting. So there's options there, but what is also underserved in the marketplace are those self-employed borrowers, right? Those self-employees, those W-2 borrowers that, they can't, they don't have 2 years history of commission. They've got bonus overtime, or they got some undocumented income that they can use. So this is the loan for those borrowers, right? So we're going to talk about the uniqueness of the light doc features. The full doc is your standard full doc, right? So we'll kind of highlight, talk about some of those things. So this slide, right, is just some information about the home equity market, right? Americans, a lot of us are sitting on 30 trillion in home equity, right? Obviously, since COVID, we've seen a massive, increase in home values across the country. We also have a lot of borrowers. I think I saw a number last week. I mean, don't quote me on it, but I think the 85% of homeowners are sitting on note rates below 3.5% on the marketplace. They're just not touching that, with rates being at 6.5%, 7.5%. So they got all this equity. They got a nice low rate on their first. So, they need a solution to tap into that equity, right? Up until recently, those self-employed borrowers, or those borrowers that I mentioned just before, they couldn't tap into that equity. There was not a product out in the marketplace for it. So today there is a product out there. I will tell you, if you're an originator not focused on that sector of the business today, it is a big market. We launched this product about 90 days ago, and it's now 40% of all loans that are coming in our door, right? So we went from 0 to 40%. So it is a big product out in the marketplace, specifically with the home equity side. And look, we're all on this call to make money, right? So a lot of people are like, well, if I do second mortgages, I really can't make any money. You can make money on that. One of the biggest benefactors of us being a bank and offering second mortgages is we follow federal state laws, what an oxymoron, of federal guidelines, right? So most lenders out in the marketplace that are a non-banking institution, they have to follow state regulations. State regulations have a little bit more, so depending on the state, right? They cap you on like APOR fees and different things. The federal has a higher exemption on there, so we play within the confines of the federal exemption. So a lot of times, if you're accustomed to doing these second mortgages, if you've done a non-QM second mortgage, your lender may come to you and say, hey, Linda, you're making, $4,000 origination fee on this charge. You're not passing APOR. You need to lower your origination fee. So that is a common issue out in the marketplace. So that does affect, we follow those federal. So that's one of the nice things that luxuries that we have. So the average American sitting on $274,000 in home equity, right? That other little stat was there. The other thing that's really happening in the marketplace is, and I have not updated this deck in probably 3 months, so I'm going to guess this thing is sliding up, with credit card debt being at an all-time high. So credit card debt is at 1.1 trillion right now. This slide is about 3 months old, so it's probably up. And the average credit card debt is at 26.25%. That's a good credit card. That's after those introductory periods of 0%, you name it. So consumers are, homeowners are leveraging credit at an all-time record, right? So that's just something just to take away from this if you just want to, educate yourself. What this should tell you is this is a huge demand for the home equity market, right? You got borrowers at low first mortgage rates, credit card debt, home equity, right? You just got to have those conversations with those. And there are tools, guys, that are out in the marketplace. I know people behind the scenes, and I'll pick on Linda. Linda, if you, we're in the Coral Gables market, I'll just pick that market, and you wanted to see how much, you want to click on a really drag and drop and see how much equity, you picked a neighborhood of 4,000 homes. You can do that now with technology, and you can actually tell of those 4,000 homes within seconds, pinpoint how much equity is by, what that first mortgage, that borrower's rate is on the first, how much equity they have, and you can generate marketing off of that to solicit them for home equity, all within a matter of minutes. That's the technology that's out there. I'll say that's an old, if you guys have been around for a while, the old farm kit leads, right? But they've now take that farm kit leads with your title company and some of these guys, and they put that on steroids for you. So just a little nugget there that with that technology, if you're an originator saying, well, how do I find these borrowers? There's ways to do that and not necessarily be your existing customer base. I mean, your existing customer base today, that's a layup for you, right? You want to have those conversations. You want to talk to those guys. But there are some things out there. And if you want to pick my brain after this or want me to have a one-on-one call with you, I'm always willing to have that with you, or stop by the booth whenever I see you guys in a couple weeks. So there's some update on the home equity side. So we'll talk about, I'm going to skip through this slide. We kind of talked about some of the highest and best usage. So with our P&L program, so we call it our Light Doc. So as a CDFI, we're a community development financial institution. We have the ability to do things from a banking institution that most people can't, right? They just can't do it because we're putting these loans on our balance sheet. And we've created a form, a single page P&L form that you as an originator send to the CPA, and they complete this form. There's no expense factor, no business bank statements needed, right, to validate that. It's a one-page form that you can use to just qualify the borrower off of. It's slick, it's unique. And the great news about it is we only require 1 year of self-employment history. So again, I'll pick on Linda again. If you've got an HVAC guy and he worked for an HVAC company for 5 years, and a year ago he decided to start his own company, that's completely fine here at Quontic, right? On the other side, the VOE, it's not your Fannie Mae VOE. There's a few lenders out in the marketplace that say, hey, I have a P&L second mortgage product. That's great, but they're not going to give you a form. They're going to require an expense factor, and they're going to want 2 year self-employment history. So that's the difference that we have. The VOE product, our VOE only asks 4 questions. They ask date of hire, current position, total income, all sources. So Linda, if you got a borrower that just started receiving commission, bonus, overtime, right, cash tips, whatever, we don't break that out. We don't ask them. We don't want them to break it out. We just want to see what their total income is, right? So another unique product for those borrowers. And you may have a borrower or 2 borrowers that are self-employed and one's a wage earner. We'll take that on borrowers. So pretty slick from that standpoint today from that. So I just highlighted what sets us apart from others. It's our proprietary. I'll show you that. We can also lend to those wage earners if they're self-employed by a family member. So if they're employed by a family member, just a CPA, we just need the CPA to do it. And that's it. These last 2 options are really, really outside of the income calculations, the difference makers. So here at Quontic, we don't need an appraisal. So you heard that correct. And you're like, wow, you're going to lend to a borrower with no appraisal. We pull an AVM on that file, Linda. If that AVM supports the value that you need to qualify it, we don't ask for an appraisal, right? You can still, if the AVM doesn't come back, you can go get an appraisal and we'll gladly take it. but I would say 95% of the AVMs come back today and there's no appraisal. That reduces the borrower's cost, right? The speed time to get that closed. Let's just talk about the headache of the appraisal, right? So we don't need that for a light doc or a full doc product. And then the other thing that is a huge cost savings for your borrower, this used to be big if you've been doing this for some period of time, is a limited title policy, right? So we have lenders and you have your title partners. We allow for a limited Alta policy for those. And, up to $350,000 second mortgage, you can get a title policy for 350 bucks, right? So a lot of lenders are asking for that full Alta policy and that appraisal still. Here at Quontic, we're not. So we make the income documentation really, really simple and light. Trade lines are light. All that other stuff is relatively pretty simple. And then we've added the no appraisal feature with that AVM and the limited Alta policy. So we try to make those as easy as we can. This is a snapshot. Obviously, I've kind of expanded it a little bit, but this is a snapshot of what our P&L looks like, right? So we give you the P&L. You as originators take that out to the CPA. We're not asking the CPA to generate one. We're just asking them to complete ours. If they want to complete one, they can take it, they can do it, and they can see it from that standpoint. This is our VOE form. So if we're all probably familiar with the Fannie Mae VOE form, and it's very labor intensive. This is all we're looking for. We're going to send this to whomever you guys put on the 1003, to validate employment. And a lot of people ask us, they're like, well, how can you do this? It's a balance sheet product. It's a bank product for us. We need these forms to meet ATR. Right? We're not validating the work number or anything behind the scenes or pulling 4506s on your borrowers. So it's a pretty unique form. As I mentioned, only current gross annual earnings, all sources. We'll take that, right? And we're using those. Benefits of the light doc, those are just some of the things that we talked about, less paperwork collected from the borrowers. What is out in the marketplace is the bank statements for the non-QM stuff. We don't need, most bank statement borrowers are those self-employed borrowers, so just use this P&L form to go get that done. And I do want to add that P&L form is an unaudited P&L. So that question does come up as well. Does it need to be audited? Does this not need to be audited? And that can be done by CPA, P10, and that it doesn't have to be done by their current CPA. Some CPAs a little funny about doing a P&L. If they want to go get it done and their taxes verified by another CPA, you could do that as well. We just need a relationship letter and what they're doing behind the scenes. So our max on our light doc, this is a quick little grid on our light doc. This is also available at quontichwholesale.com. You can pull our grids, our matrix, all of those things. Again, quontichwholesale.com. Rates are on there. You can price these loans in real time. But this is primary second home. So for our light doc, that P&L, that BOE, we'll go to a 350 loan amount, 75 CLTV, right? So we'll do that. And a lot of people are like, well, 75 CLTV. Our average CLTV right now is 68% in our pipeline. So you would think you need to do 90%. So don't get caught up on that number, because a lot of borrowers have that equity in the value in their home. So that is the light doc, right? And that's for owner occupied second homes. We will do some 2 to 4 units in that as well, and some condos. On the full doc, that's your standard Fannie Mae full doc. We'll go to an 85 CLTV and a $500,000 loan amount on those. But that AVM feature and that limited Alta feature, we will only go to a 250 loan amount with that AVM. And the Alta will do it on any loan amount, but the AVM, it does get capped at that 250. The full doc also does investment properties. So we will do those investment property second mortgages on that as well. Both of them have that minimum FICO score of 680. So that does come up a lot as well. So I'm going to pause. I'd love to go a lot deeper into it, but it is limited and it is light as I just explained it to you. So I'll kind of open it up and see if you guys have any questions or anything related around that for me. Do we have anything in the chat box?
We do not. So if anyone wants to add something in the chat box, or even just shout out, I think that we would be okay with that. I have a couple questions for you, so I could start. I'll be the icebreaker here, James, for you.
Perfect.
So in the HE loan, is that in all states? You lend in all states for that?
We do on the light dock. We do. Good
Okay.
question, Linda. We do on the light dock, so that's in all 50 states. Um, Even the great state of Texas, if you're in Texas and the cash out, we'll do the Texas cash out with that, right? So we will do that as well. The full dock is Texas and Tennessee are the ones that we exclude. Well, actually, full dock now is Texas. Only Tennessee has an issue with full dock. So very rare in Tennessee, but that should change here pretty soon.
Okay. And so you say you just kicked this off a couple months ago, or yeah?
We did. So we kicked it off 4 months ago. And I'll give you guys just another nugget, right? These rates range from 9% to 12%, right? Based on FICO and LTV. So a lot of times we'll get people that'll say, you know what, because the consumer's mind is like, I want a line of credit, right? I want a line of credit. I want a line of credit, right? And I'm going to give you a real-time example. I'm doing my sister's loan. She wants a second mortgage. And
Fun.
yep.
Yeah.
Always fun doing your family's loan, right? You got to
Yes,
show them what
exactly.
the CD is and all that other good stuff. So I said, her rate's going to be 9.875 on this deal, right? That we're doing. She said, well, I want a line of credit. I said, well, her name's Ann. I said, Ann, I can't give you a line of credit. It's closed in second. I said, but what you can do is take this $150,000, right? Go put it in a savings account. Savings accounts right now are paying between 4.25% and 5.25%. Go put that in a savings account at your local bank. Put it in, let it draw that interest off of that. Her bank was paying 5.25%. She's like, I didn't even know that they're paying 5.25% on a savings account right now. And I said, so you're really only paying 4.25% interest on this money that you're using today. And unlike a line of credit that has a draw period and fees every time you pull it, this is in your savings account. But just put it in there, put that money. So as a financial advisor, I would assume most of us originators are. That's something that any bank is, those banks now
Hmm.
are paying money in these savings account that you can pull in and pull out at any given time. So that's just a little nugget as well, whether you do that with Quontic or whomever,
Hmm.
right? That's another little thing that you can combat that line of credit issue.
Well, if you can sell your sister, you probably can sell anybody, right? So
Yeah, it was cool. She lives
we
she lives she lives down in Mobile, Alabama, so she beat me up.
okay. All right, we do have a question here in the chat box. I will read it out loud here. I just have to scroll back up. Okay, question for a specific borrower I have. If the borrower is himself a CPA, would he need an external CPA to prepare the P&L, or can
He
he prepare it on his own?
he would need an external CPA to prepare it.
Okay,
Good
that's a good
question.
question. Very good question. So in the HE loan that you have, or I saw primary and second homes with the light dock. What's the ratio? Do you know the ratio? Are you doing more primary than second homes? Because here in Florida, we are a lot of second homes. So tell us
Yeah,
a little bit about that.
yeah, it's funny. We just looked at that data this morning. I think the primary loan for an investor out there is the DSCR product, right? And
Right.
most of those have no income, no employment. Um, so we've only seen maybe 2% investor loans come through. There is not an investor DSCR second mortgage in the marketplace today, right? So but if you've got that traditional investor that can, that has those 2 years tax returns or is a W-2 wage earner, we'll do them all day long. But it is not a high demand product, I think, just because of like Florida. I live in Arizona, huge Airbnb, huge investor market. Those guys they qualified that first mortgage with no income, no employment.
Okay. Yep, exactly. All right, question here. Origination fee. Is it a flat fee or is it a percentage of loan? And what do you get paid?
So we allow you to
Max
go
loan
up.
amount.
So we only do borrower paid here at Quontic, so you can go up to
Okay.
2.75 of the loan amount, right? So you can
Okay.
go 2.75. We're doing a lot of these, and our minimum loan amount, I don't think that came up as 100K. And even at 100K at 2.75, we're not felling APOR. I haven't seen us have go back to an originator and say reduce your origination fee in order for us to pass any compliance.
Okay. And what's the normal time frame that you have for this? So
Well,
what can we expect?
these are moving relatively pretty quick, right? Because again, there's no appraisal.
Mhm.
The Alta policies, and we also offer a feature here at Quontic. We partnered with two national title companies. If you want to let us know, hey, you can pull my title, through Nations Title. We'll order it for you on your behalf, and they do mobile notaries. They've got a flat fee of 350 and some other stuff. We also do this in New York, right? So if you're an originator that, is out there in New York, we also do those in New York as well. So they move relatively pretty quick just due to the limited documentation that we don't need.
Okay. All right, got another question here. Can you tell me if the HELOC underwriting is to Fannie Mae or Freddie Mac? I have a buyer that has RSU income.
So we default to, if it's a full doc, right? If it's full doc, well, in all of our guidelines, we default to Fannie and Freddie. I'll give you an example, student loans, right? Student loans, Fannie is 1% if they're there. Freddie, you can actually take 0.5% of that and use that. We're going to default to the most aggressive agency because our guidelines just says default to agencies, not Fannie or Freddie. So we would default to the most aggressive guideline on that. If it's
Okay.
not written in our guides, which that one's not, we're going to default to the agency's guides.
Okay. And another question, is it e-sign or wet sign?
Well, we love e-sign, right? So
Okay.
everything is e-sign. If that borrower cannot, for whatever reason, e-sign, we wet sign as well.
Okay. So someone came in late, so just remind us on the light dock. It's a 250,000 loan amount, primary residence, you say?
So minimum 100K, max 350,000. Correct.
And you said your average was what? Did you give
The
us an
average
average?
CLTV, the average CLTV that we're seeing right now since we launched this is 68% CLTV, average loan amounts 174, average FICO score 747. You may ask how I know all those numbers. I just looked at my report this morning.
Well, you're prepared. There you
Yep,
go.
that's right.
Okay. Will you go behind a $3 million loan?
We will, with an
Okay.
exception. With an exception on the light dock. The full dock, the aggregate is 3 million. That would be the first and the second. So on the light dock, we would make some exceptions on that.
Okay. So how many, if we wait for some more questions, so how many investor do you do? We just briefly talked about that with the DSCR loan and but do you do any type of investor financing? Is that any volume in your production at all?
So on our first mortgage product, right? Since this was just second, on first mortgage product, we are a leading, we've got some leading, so a pretty good DSCR program. We're one of the few lenders that will do a first-time homebuyer, first-time investor DSCR, first mortgage, right? First
Right.
mortgage.
Hmm.
We do a ton of those where you've got borrowers that are first-time investors, first-time home buyers. Most people will not touch a first-time home buyer, right? Most of your investors won't. We will allow first-time home buyer and a first-time investor, right? People will do first-time investors out there, but they've got a home-to-home in the last 36 months. Us here at Quontic, we're not looking at that.
Okay. And what is your loan limit? We're going to have to put your contact information in the chat box because a few people are asking for that. So we can do that on our end, Courtney, if you could do that. So what is your loan limit on DSCR?
So our minimum, that's probably going to be the minimum. I think that came in from Wanda is 150, right? And you may see a lot of investors today with that limit outside of a select few. There's just no appetite for investor loans below 150. So we do have a minimum loan amount of 150, a maximum loan amount of 3 million.
Okay. And the
That's
max.
on your standard DSCR. Foreign nationals, we're going to cap you at 1 million on the foreign national product, which we do a lot of DSCR foreign national loans.
I was just going to ask that again. Being in Florida, we do have a lot of foreign buyers here.
Yep.
So you guys you're not afraid of that. You
We're,
like
we're,
it.
we're, we're not afraid of the foreign national. We do them well, no income, no employment, right? No credit on those bad boys. We make them pretty easy. And we also do a lot, since you spoke of Florida, We also do a lot of I-10 loans, right? So those I-10 borrowers, we do with that P&L, that VOE feature. That's all we look for. Primary second home, we do have the investor portion of that rolling out here in the next 30 days.
Okay. So a question for you. We have if you were counseling a new LO that either opened his new business or is just fairly new in the business. And when I say fairly new, it's in the last 2 to 3 years. Kind of treat it like a first-time home buyer here. So what advice would you give him, especially going out of the box of the QM to non-QM? What advice would you give a new LO on the type of products to concentrate on or to expand on? And I'm sure it depends upon where they are in their market. So let's assume we're off of Florida because we're FAMP. So, can you give us little tidbits or advice that you would provide?
Well, first and foremost, I would say, you got to work hard in this market, right? Don't give up easy, right? Because it can be frustrating right now. Specifically on the non-QM side, and since you mentioned Florida, learn, pick 2 or 3 investors. The main thing that you're going to get is, specifically if you're a mortgage broker, you're going to get overwhelmed with all these investors, right? They're really all the same. When you peel that onion back, they're really, really all the same. Find 1 or 2 good investors, learn their guidelines. But if I'm in Florida, I want to learn that investor market, right? I want to learn the condos. I want to learn, the ins and outs of non-warrantable condos. And you just want to pick where you are, what you can become a subject matter expert in. Learn that, not try to learn everything. Don't try to learn, oh, I need to do this bank statement loan, I need to do all these other things, but really just try to find your niche on the non-QM side. And here's the thing with non-QM. We mentioned foreign national, we mentioned I-10, we mentioned, we didn't talk about asset depletion. The non-QM market is made up of, if it was a pie and 100%, we looked at it, DSCR makes up 15% of the market, right? 15%. And then the bank statement, AKA P&L loan, is the other like 80%. The other 5% are the I-10s, the foreign nationals, the asset depletion. So focus on where the main market is, but be vocal with your marketing. Lenders like ourselves, we have co-branded material that we've already done the legwork for you. Come to us and say, hey, slap that pretty picture on one of our flyers, your company logo, and go out full force with these realtors. There's a lot of originators today that just don't educate their realtor partners on doing loans, right? And
Mm-hmm.
become a deal structurer, right? You got to learn how to structure a deal, because these non-QM loans are not all equal. You don't just run them through AUS and, it fits that bucket, right? You're going to uncover this rock and then you're going to get title and another rock's going to get uncovered, right? Or you're going to look at that something over here and another thing's going to get uncovered. But, don't get frustrated, right? I can tell you, I love non-QM. I cut my teeth in the subprime business. And that is truly where the borrower appreciation come from. I mean, we get so many accolades today that come through with borrowers that just thought that they couldn't qualify for a home, right? Outside of that W-2 borrower, with 20% down, that's fighting you over an eighth in rate, these borrowers are very, very grateful that you help them either refinance or get into that home of their dreams.
I think one of the key things you just said, James, was, when you learn to be a deal structurer, and part of doing that is leaning on your wholesale rep and help you do that, because you're learning and we're all
Yep.
relearning. So I think that, we all have our partnerships and our relationships out in the field with our realtors and our builders and our referral base, but we're really learning to lean back in and depend on, companies like yourself to help with consistent training, product knowledge, and so forth. So, okay, we have a couple questions here. What is your max loan amount on asset depletion?
3 million.
3 million. All
So
right.
you bring up a good thing on the asset depletion, because a little unknown, and I'm going to bring this up just because of digital currency is big right now. We allow for
Mhm.
crypto to be used in our asset depletion. We actually take 40% of that face value of the crypto. We divide that by 60 months, knock yourself out. We also divide everything by 60 months versus the industry standard 84. If you go out 84, you got a longer period. That 60 months allows us to actually give that borrower more income. So we do some crypto there. Not a lot of people do it.
And so in the asset depletion, is it all cash?
It's based on what you're using as an asset. 401, checking savings, you're at 100%, right? Stocks, bonds, you're at 90%. Crypto, you're going to be at 40%. We take that face value of what that is, divided by that, right? Use that and put that out there.
Okay. And so, someone's asking about a rate sheet. How about getting
So
information on your
you could go to Quontic Wholesale, quontichwholesale.com, and go to resources. Our daily rates are there, right? We post them, and the matrix. So we're not a Cheesecake Factory lender where we got 19 pages of rate sheets, right? We've got
I
six
like that.
pages of rate sheets, and we break it down for you. It's the old school way, right? Because we don't pay lender paid comp, right? We're all borrower paid here. So you have a base rate, you add to that, right? And one of the things I will add, we just do non-QM. I'm not Fannie, I'm not Freddie, I'm not Jenny in my wholesale. My underwriter's average tenure here at Quontic is 7 years. So they know. You mentioned something, Linda, too, about the AE, but you also need to make sure with a good lender that their underwriters know how to underwrite non-QM loans. So
Absolutely. So back on the all cash, it's can I get 3 million out on?
So you could get 3 million. Our standard is a million, right? A million
Okay.
cash in hand. If you're paying off debt, we don't count that as cash out, right? So cash in hand is a million. If you're at 65 LTV and below, you could get 3 million cash out.
Okay. All right. So there's some flexibility sometimes
Yeah,
then
that's
on.
that's an exception. You wouldn't find that on our rate sheet, but we do have a
Mhm.
behind the scenes with us being a bank. We make those exceptions.
Okay. All right. So you mentioned non-warrantable condos, another, hot ticket here in Florida. So tell us a little bit about any documentation or guidelines that's better or worse than anyone, or is it kind of what
No,
do we
I
need to
would
get to?
say, we do a lot of co-ops as well. So
Good. Okay.
I've worked at some other companies where condos were they were painful, very, very
Mm-hmm.
painful, right?
Mm-hmm.
Here at Quontic, we've got a condo review desk and we've got a single condo questionnaire form that you can use, you can send out. We'll actually take a condo questionnaire if you got a Fannie Mae one. We'll do it. If you had a condo questionnaire and you want to know if it fit today, you could send it to me and I'd let you know within 24 hours if we're going to lend on that or not, right? Non-warrantable is going to be 75 LTV. A lot of times that you're going to see with these condos, specifically in Florida, you're going to see litigation, right? Specific with everything that happened there. You're going to see some insurance coverage, issues. The question that needs to be asked is, do you allow for multiple factors of the condo and would you still lend in it? And the answer is yes. A lot of lenders will say, I'm one. You got litigation, that's fine. We need to look at that. But if you got other insurance deficiencies and some of that other stuff, they wouldn't take that into consideration. It's one strike, two strikes, you're out, right? We look at the whole picture of the project and things, but we're very, very flexible, very knowledgeable of the condo market.
Good. Good. Yeah. Besides the hurricane issues and insurance issues, we do have a lot of slip and falls here in Florida. So there's a little bit of litigation going on, and probably 95%
Yep.
of the
Yep.
developments here in Florida.
Well,
So
we're a Sue Happy Nation. So
yeah, that's right. Yeah, I see it almost
yep.
consistently on every condo I do, the slip and fall. So it does happen here. So, any other questions? Wanda, who's been active in the questions, and thank you, Wanda. Those are great, great questions. She did email you, so
Yep. I'll
so
get
you'll
back to you for
can
sure.
get back with her. So any other tidbits that we can take away as far as learning more about Quontic Bank?
Well, just to close this out, hopefully you gathered that we're very unique just in this casual conversation that we had, whether that's on our first mortgage product, our second mortgage product. And what I hope you gather as well is we know what we're doing, right? There's a lot of people out there, not to say that they don't know what they're doing, right? But a lot of people over the past couple of years have just gotten into 9QM. As volumes dried up, they were doing agency, now they're doing 9QM. Not to say that they're not good or they're not bad, right? But I can tell you here at Quontic, I probably took in 30 transferred appraisals today from other lenders that didn't close
Wow.
the loan, right? That the loan officer went there and they got misled potentially. And I say I back cleanup a lot. If we're a baseball team, I'm sometimes the third hitter. And if you watch baseball, that third hitter is the home run guy, right? So we're very knowledgeable in the sense of just doing and focusing on 9QM and trying to make it easy for our originators, right? So with everything that we do. So we don't try to overly complicate it. And my underwriting manager, my chief credit officer, she's a deal maker, not a deal breaker, right? So we try to make the deals work if they can work.
It sounds like great information, and I like the part where he said 10 years in the business, and
Yep.
that's it's really important today. As you know, we've all been involved in companies that we've had to shrink down and
Yep.
build back up when production comes in, and when you have consistency with number of years of employees, especially in the operations, that's critical. So
Yep.
if there's any last questions, you have a couple minutes to put them in. If not, I just want to wish everyone, it is National Mortgage Brokerage Day today,
That is
so it's
correct.
really kind of fitting to have you on here, James. And again, Quontic Bank and James and his team will be at the FAMP convention. So we hope to have everyone there and stop by and see him and be part of this show. It's the greatest mortgage show on earth is our theme, and there's a lot of things going on, some great content. And James will be speaking. Not only do they have a booth, he will be speaking as well at one of our on one of our tracks here. So if there are no further questions, I thank you, James, so much. It was nice to
Thank
see
you
you, and
guys.
I look forward to seeing you in person in just a couple weeks. And thank you, everyone, for being part of this webinar today.
Thank you guys so much. See you soon.
Okay.
Take
All
care.
right. See ya.
All right. Bye bye.
Bye bye.